Traders, it's Anthony here. I hope you're having a great day wherever you are in the world. In this example, we're looking at the euro dollar. Please read the disclaimer. Make sure you understand that this is for educational purposes only, and enjoy the video. What I want to do with this video is a couple of things. Firstly, this is what I consider to be the most important aspects of technical analysis. Let's call it maybe a tutorial and a trade idea. Okay, euro dollar. The very first thing that I'm going to do with this is I want to find out, even go out to the 3 monthly time frame, what is going on with the banks. The banks move massive amounts of capital through these markets, and I want to ride their coattails. What are they doing? Where are they invested? And at the moment I can see pretty clearly that the euro dollar, they are invested short. They're selling. Even closer to home, I mean, in the big picture, this is a big sell way from back up in here. Okay, now closer to home, we've got this candle here with a pin bar above. We can see that this move here trended down. It's retraced back in. This is bearish. So I want to be in sync with the higher time frame. The 3 months tells me this is bearish, and from a trend perspective, lower highs, lower lows. Okay, it meets my criteria. So I'm going to be looking for a short, a sell idea. On the monthly, clearly it's bearish, and you want to get your head around how big this market is. Look at this, for example, here. You've got these reversals that go on. These ranges, this is where the banks fulfill their quota. This is where they build their order book, and they're eyeing, well, I mean, there's a target right there. You know, while they were sort of messing around up in here, they got their eyes on the target. They know where they want to trade this. They know exactly where they want to trade this. So they work their orders in big time. They get a discount wherever they're entering the market. And then, you know, they unload down here, and can you imagine the amount of profit that's involved with this? As far as the banks are concerned, it's huge, right? So they're invested, they're big time invested in this. So if they're doing the same thing here, as we've seen, you know, further back, you know, down in here, we've got these areas here where they shift gears with the market, they turn the market around. If that's happening here, which it is, obviously, we've got this huge red candle. This is a monthly. We go down to the weekly, we'll see. It takes a massive amount of capital to move, this is a market maker, to move the markets like that. And that this is a result of all the activity that's been going on within this range. This spike up in here, that's taken out these buy stops, and look what happens. Okay, they are short. So that's convinced me that I'm going to be looking for a sell opportunity, for one thing, trading with the trend. And it's just a matter of, like, consider the basics with a trend. Okay, look, you've got a series of, in a downtrend, lower lows, lower highs. Each one of these lows is targeted and gets taken out. Each one of these lows, have a look at this back up in here. Here we go, look, lower low, lower high. The previous low gets taken out. Well, that one didn't. Lower high, didn't quite. Lower high, very lower low, you know what I'm saying? And on it goes. So in a picture perfect trend, here's your lower low, lower high, blah, blah, blah. If that's the case, then if we consider this, grab a whatsy-doovy thing here, this price swing, high to low, we can assume that this is a pretty reliable target. Retraces, and I'm looking for an ABCD, if you want to call that ABCD measured move. So this is a hypothetical target down in here. We might trade down in here, and there's a fairly good chance, given that this is a downtrend and they're invested short, they're going to look to trade way beyond this low over here. But this is pretty safe as far as I'm concerned. And let's have a look and see how many pips are involved here. Well, let's call it 1,000 pips. 1,000 pips. Think about that for a minute. What does that mean on your account? 1,000 pips. Try and wrap your head around how many months. 1, 2, 3, 4, 5, 6, 7, 8. They've been working this level for 9 months so that they can short this. How much capital is involved? There's billions of dollars involved here. This is huge. So you want to be jumping on this ship. And if we want to use that as an analogy, think of it this way. That's a big investment. They want the outcome. This is a big investment. There's months of planning and building their positions, filling their order book. They want the outcome big time. And it takes, I mean, look at that. How many months, right? Think of this as an ocean liner. You don't turn on a dime. This takes a lot of time planning and a lot of work. So they have a huge investment of at least hitting this target. That's what I'm looking at, and that's what I'm thinking when I'm looking at this chart and beyond. Okay, so we've got our ABCD thing here going on. So let's just look at this now from, okay, it only goes back that far. All right, see this low? Look at this. See this range way back over here? Let's pull that through. See that? So you can rely on these previous levels pretty much. Unfortunately, that's as far back as these candles will go. They're targeting liquidity. That's what they're doing. They're hunting liquidity. The market needs liquidity to function. So they're going to hit stops. They've got stops under here from way back that they've taken out. They've got stops up here. Well, there's this range up in here from this level that traded south. They take it up in here and they take out stops that are resting up in here. If they're going to sell, they need buyers. So they have to manufacture into the market right here where you see this wick up, this liquidity pool. They have to create that. Okay, they have to draw in funds, institutions, liquidity pool. They've got to draw in retail. Retail is small compared to the big guns, but they're going to rely on the funds and institutions to be building their positions as well and loading up with their stops. Okay, so big money then takes out a good portion of this resting liquidity, this buy-side liquidity up in here. So they're looking for that. So there's a target, and we can't go back any further than that, so that's fine. So that's it. I mean, look, the trend we're looking at, but how do you get involved with this? How do you know how far back the pullback is going to trade? I have a bit of a thing. I've always used the Fibonacci, and it's common knowledge. People use the Fib, and they're looking for, in a trend, we're looking for the 618 to 786 Fib retrace, and there's an entry in through here. And then we can refine that on the lower time frame as well. But for every one of these price legs, we can look for an opportunity in this yellow zone here, 61.8786 Fib. So that's one thing. Again, Fib high to low, there's an entry point. This is fractal, so at the moment this is a monthly, but we can do this on every time frame. So I really do like the Fibonacci. I use the Fibs extensively. Even here, look at this run here. The high to low, see how it comes into the 61.8786, and then finally high here, swing high to swing low, 61.8. That would have been a nice entry point. I missed. No, I'm actually in this one. I think I'm in the euro dollar. Yeah, on one of my accounts. Righto. So that's that, and then we've got this move. So the higher time frame, I'm bearish. We go down the time frames now, and we look at this from this perspective. In fact, if you wanted to with the monthly, that 61.8 Fib pullback is ideal. It's an ideal entry. But now what about down in here? We go down to the lower time frame and we're looking, this is fractal. So we go down to the weekly, have a bit of a look at it. What's going on here? I know that I'm going to be looking for a short. We've got this break of structure, bearish break right here, trades down. So where are we going to enter? See, that's the question. Now you want to be careful. Again, if I'm looking to short this, well, you could pull a Fib from here. And that could be an entry point. Short position, 61.8 Fib. That's the weekly time frame. The stop above the high. But have a look left. Have a look at, in fact, we'll go down to the lower time frame because that'll spread this range out a little bit. Let's go down to a daily, see what we got out of that. Maybe you need to go down to a 4 hour to pick up this. Right, but this is the weekly. If you wanted to enter the 61.8 Fib, pull back on the weekly, and there's a high to... Now, the thing is, we don't know whether this is going to pull back this far, do we? We might miss this opportunity, but you want to be careful too, because it could pull back, and you've got to set your stop loss somewhere. So I would set a limit sell order here. I'm okay with that, and that pulls back up in. I get a fill, stop above here, and I don't have a problem with that. I'll just be careful because the market's going to be looking to hunt stops at previous highs and lows. So you've got liquidity resting up in here. Now watch out for that. So with this leg down here, what's happened here, look. See these lows over here? Okay, they've taken out all the liquidity resting under here, or a bulk of it. See these stops under here before this rally? They've wiped that out. Now, where's the path of least resistance? Well, that's resistance, so it could be the pullback up into these levels here, and then they pick up liquidity up in here, and we're off to the races again. So that's that on the weekly. Let's have a look at it on the daily. All right, see this low back over here? That could be a thing. We don't know. We don't know how far back this is going to trade. See that? See how they've traded into here? Now have a look at this on the daily time frame. The other thing too is if big money is short, the path of least resistance is in that direction, bearish. The path of least resistance, we've seen that on the monthly, right? We've got this huge thin candle. Let's just quickly go out and I'll show you that. The path of least resistance, where is it? And then we'll come back here to the daily. 1 month on this time frame. See through here, this thin candle, right? The resistance is up in here. That's big resistance. So to me, the path of least resistance is going to be through this. If you had a volume profile, you would see that there's thin volume here. The volume profile would, let's just grab it actually. I don't know, have I got it? Visible range volume profile. Don't rely on this thing, by the way. See this gap through here? All right, so we got a projection here, bit of a projection here. The path of least resistance is through this gap, and that comes in around here, where it's going to meet the high of this range here, and then down in here. That's the path of least resistance. This is big resistance through here. Look at it. Look at all the business that's being done. Don't want to rely on this volume profile because you can see it on the chart. So now this brings me to, see this price action here. Well, this is what I'm going to be looking for on every time frame. Bearish, I want to see a double top. I want to see the range. Daily, 4 hour, 1 hour, 15 minute, right? I want to see this price action. You get the range in a bearish trend, and you want to see the attack on liquidity and a big move to the downside, comes back to retest, and there's an entry point right there. Okay, this is the liquidity run. Okay, so now we're looking at this section here on the daily time frame. This was the double top I mentioned earlier, the spike into liquidity up here on the monthly, this range, and then we get this move here, the break and the retrace back into over here. These lows, the low of this, well, the range. Okay, so it's come back to retest the range right here. So is that going to be enough to roll this over here, or does it trade further back? Remember, again, we're looking at the path of least resistance, and if we go out to the monthly, just keep that in mind. Right, the path of least resistance is down through here, and then we hit resistance down here. Okay, come back to the daily quickly. So this is where you want to be a little bit careful. On the bigger picture, yeah, I mean, we've got this, and we've tapped up into it. Does it roll over here, or does it look to trade a little higher? That remains to be seen. Right, so you can set up a sell on the higher time frame with a wide stop, but what if you want to get involved on the lower time frame? What I'd be looking for here would be pretty similar, really. It could roll over here and trade south, and that's it. It may or may not trade further north. But understand that that's the risk. It could trade further north. That's why you have to have your risk management in place. So let's just look at this price action here. It's ranging through here. We get now a lower low there, lower high. So this is something that's worth noting. Lower low, lower high. So you can see a little bit of a shift going on here. It's run into liquidity above. The question is there enough liquidity in here to roll this market over, or will it push through looking for liquidity further up? Okay, so if you're trading this on the daily time frame, then that could be a short. You go for a stop above here, and you're away. But understand that there's risk involved. That may or may not work out, and this could spike up and take your stop out. This is why the next phase of this video has to be about risk management. So let's just quickly cover that. Before we do, we'll just go back out to the weekly. Let's have a look and see what that looks like. Yeah, so the weekly, daily, that works for me. Yeah, but we've got all of this to potentially trade back through. You can mark up like the biggest green candles prior to the move. You've got this level up in here. So we'll call that a weekly, see? So there's a possibility that this travels back up in here and then we get our move, right? That's definitely a real risk to consider. You got this level under here that could be a target. Now you can take the risk and you can trade this here with a small position, and if this rolls over and trades south and that's it, well, happy days. There's your target, right? So that's it. Now that's a trade idea for sure. It's valid. We've got the price movement, we've got this retrace here up into this level, and yeah, sure, the risk is there, it's real. Okay, stop loss above here, and we've got a 5-to-1 risk reward. That's fine, and beyond. Okay, so you'll continue that down, but understand the risk. So this is where it brings me to your trade, your risk management. Now the other thing you can do with this is you could set up another stop, another short I should say, up in around these levels on the weekly time frame, stop above this high, right? So that's a second idea, and your target's going to be much the same, pretty much. Okay, this daily here gets you in at market, and you're in the market, right? So now here's the thing with your position size. It's so important to be consistent and to manage your risk. This is where you lose money. This is where I lost most of my money in the past, was jumping into these trades with all sorts of crazy lot sizes and having no idea about position size. I'm going to allocate a maximum risk on my account, 2% exposure. That's it. How many trades am I going to allow? Well, I mean, it could be 20, it could be 30. So let's just say we go, okay, I'm going to allow 20 trades, 20 running trades at 0.2%. My error, 0.1%. So 20 times 0.1 will give you a 2% risk. Let's just refine this a little bit more. 20 trades at 0.09%. So each one of these you open is 0.09%, and whatever that range is, it's consistent at 0.9% of your account at risk on each trade. Now here's the thing, I want to take 2/3 of my position off. So there's an entry, a stop loss, and T1 I want to take off 2/3. If I'm going in at 0.09, that's going to give me 3 positions on every single trade, 3 positions at 0.03369, right? 3 3s are 9%, not lots, percent. All right, if that's going to be the case, 0.03%, you open 1, 2, 3 positions, bang, 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 0.3%. 2 of them is a target here, and the other one, the target is well and truly further south. And then you just close 2 of these positions here. That's one easy way to do it on MT4. Or you can open 1 position and take partial profits, 2/3, right? And then you leave 1 to run. Each trade, maximum exposure 0.09. It gives you 3 times. That is one of the most important aspects of trading that you need to get your head around. So number 1 is you've got a strategy. Well, we've got a strategy. We're looking for these trend continuation, retraces, etc. And part of the strategy must include your position size. Now, if you're a confident trader and you're making money, kudos to you. Fantastic. Well done. I congratulate you. If you're struggling to be consistently profitable, my VIP guys receive my trades that I'm taking on a live account. And if you shout me fish and chips once a month, here it is. That's all I'm asking. I'm happy to share my wonderful fortune with you for lunch once a month. You shout me lunch and you gain access to a lot. So here's an invite, guys. Jump on board and enjoy the journey. Love to see you in our VIP Telegram group. With that, I hope you have a great day. Safe trading. And yeah, here's a couple of potential trade ideas. See you in the next video.